Hello traders, Cousin Vinny coming to you from theclosingprint.com on June the 16th, 2019. Happy Father's Day. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher. They are somewhat flat, having gained 6.7% the first week of June, with mixed readings on the big cap tech names. The bond stock ratio bullish, HYG junk bonds bullish, Dow Composite bullish, the S&P 1500 on a buy signal into the seasonally weakest month of the year. As risk aversion continues, we saw strength in bonds last week. The heat map is showing no change for the S&P sectors, with strength in builders, materials, hospitality and restaurants, retail, healthcare, and consumer discretionary. International markets are improving. Australia, Brazil, Canada, France, Greece, Sweden, Turkey, Japan, and Russia are all bullish and above their 21-day moving averages. The IBD 50 we'll look at this week, all of them showing relative strength, and we also see strength in builders. Bukowski has 505 green with a CPI signal green since June the 7th at 65%. It's bullish with 22 bearish patterns, 21 bullish patterns, and 436 patterns waiting for a breakout this week. Bottom line, this is the seasonally weakest time of the year, with traders and investors getting ready for the holiday. So take it slow. We'll focus on the stocks that are showing the most relative strength this week, and we'll talk about it live during the broadcast. The S&P 500 and the spiders finished up on the week 0.56%, following a 6.7% gain from the preceding week, where we reversed off of the 382 Fibonacci. This is a best case scenario. We have not given back much of that gain, with RSI still above 50 and rising. Volume did increase, but did not surpass the preceding week. MACD is trying to move back above 0 and its signal line, while Rinko continues to build white bricks and stay bullish. Price action on the daily managed to do exactly what needs to be done. After a 6.7% gain, we moved sideways and consolidated in time rather than pull back in price. All of this happened while price action remained in the upper half of its weekly range, above the blue support resistance zone, and RSI remained above 50 on the 60-minute chart. Tick cumulative continued to drift lower. We did see a lot of sectors showing relative strength, many of them above their 20-period moving average and rising into the seasonally weakest months of the year. Not a bad showing, all things considered. The NASDAQ 100 fared a bit better, trading up 0.83% for the week, besting the S&P 500 with a very similar doji pattern. To finish the week, we didn't pull back too much in price after a nice gain and reversal from the 50% retracement on the weekly time frame. That said, RSI remains above 50, volume is looking good, and MACD is trying to turn, but below its signal line. If we are to see any upside, we need to see IWM participate. IWM daily is just hugging the 200-period moving average, continues to see a little resistance, though the bias seems to be upward. We do have volume by price resistance overhead as well, so a move above the 200-day would be viewed as very bullish for the indices, and a rejection would most likely point to a move lower for the S&P 500 and the NASDAQ. The S&P 1500, including the 500, the mid-cap 400, and the small-cap 600, is still on a buy signal. Histogram confirms above 0, and the signal line continues to rise into this week. All of this happening, of course, while the New York Stock Exchange high low index continues to press higher above the zero line, pegging the similar levels that we saw back in January 2018 across this dashed line. We have yet to get back above that level and look forward to that in the weeks to come. As long as we stay above the zero line, that's bullish, with NYAD, New York Stock Exchange Advanced Decline, making new highs last week, and the junk bonds continuing to move slightly sideways. In addition, this inverse VIX indicator remains green. This is a short-term 60-minute chart. Buy when it's green, sell when it's red on a 60-minute time frame. Finally, with the increased volatility, we saw a big range over the last few weeks with puts being bought as this indicator spikes higher. When it's in the red zone, it just means there's so many people buying calls that everyone seems to be bullish, and the likelihood is this will point to a contrarian move to the downside. As we've seen in the past, low readings typically lead to a reversal or short-term move lower. In this case, we moved sideways last week, the best case scenario after a 6.7% gain. The bond stock ratio is also short-term bullish, long-term neutral at the present time, as long as this indicator continues to drop. Focus remained on bonds as we saw AGG continues to push since the September-October low where we first got long, with both AGG and TLT giving us no reason to take profits just yet. We do see some resistance potential at 133.31 where we almost tagged that area the preceding week. TLT still strong going into the third week of June. That said, junk bonds did move higher the preceding week and then flagged sideways, also bullish for equities. We have the green, red, and blue lines respectively, IBB, IWM, and USO, pretty much moving sideways. And we have the New York Stock Exchange Advanced Decline, making a new high last week and bullish. And finally, high yield corporate debt, which produced a doji similar to junk bonds. As we pushed off the 20-period moving average on this weekly time frame, the preceding week, we took a respite and a much needed break as traders resigned to a stalemate to end the week. The US dollar, of course, moved back to the 200-period moving average and oscillated a bit, but finished the week very strong, just below the 50-period moving average to start this week with RSI rising. We need to keep an eye on the US dollar, especially for you gold traders. I saw a number of people taking gold trades last week, which tends to move higher into the month of July and August, typically peaking at the end of summer. The same, of course, goes for crude oil, tends to move higher during the summer months. So we will be interested in how gold and crude oil trades, considering the Middle East tensions at the present time with Iran. West Texas, in this case, on the weekly time frame, producing two wiki candles, showing buyers just above $50 per barrel. Looking for a bullish trade back in the opposite direction, especially considering the headline news risk at the present time. The sector heat map did see a little bit more red in the oil and equipment, exploration and production group. However, there was strength in materials, leisure and entertainment, food and beverage, retail, healthcare, and consumer discretionary. Everything else was pretty much yellows and light oranges, with international markets improving. As previously mentioned, Australia, Brazil, Canada, France, Greece, Sweden, Turkey, Japan, and Russia are all bullish, above their 20-period moving averages and rising. In most cases pulling back a little bit, but still in bullish patterns. The strongest sectors remain the interest-sensitive groups like real estate, materials, note the volume the preceding week and the flag last week. The communications sector, XLC, with RSI rising through 50, price above the 20-day, and volume by price resistance. Financials looking similar, above the 20-day, in addition to industrials, with strength obviously in defensive sectors, XLP, XLU, and XLV. We have to be very watchful on these, as it could signal more defensive posturing by institutions, while consumer discretionary obviously doing better during the nicer months of the year. XLY also includes the builders, which are performing very well, and we'll look at a couple of those in a few minutes. Stocks that we're interested in trading this week from the IBD 50. Baozun continues to push higher, looking for a little bit of a pullback or a flag. RSI is above 50. Looking for higher prices as the stock apparently headed back to the 50 zone. With CADENCE design from a previous consideration, pulling back to the 20-period moving average, buyers did step up. We're looking for either a test or a reversal on Monday. If we start to see bullish action, look for this to break out in the short term. With RSI above 50, COMCAST moving above the 20-day last week, noted by a few people in the trading room. I believe Pizza Maker and Susie, among others, were looking at this. We liked Comcast for a mean reversion trade, a move back through the 20-day, which we're seeing now as RSI continues rising. Look for a bullish day on Monday. Maybe we'll hit this for a couple of days and look for a move back to 44. Payment processors like Discover Financial, these have all been doing fairly well. As we saw in Square a couple of weeks ago, as this reversed through the 20-day, continues to rise, looking for Square to head higher over the next few weeks. Always aware that this could pull back a little bit before moving higher. Just keep an eye on Square. EPAM pulling back to its 20-period moving average, a flat base, little shallow cup, looking for a breakout in the short term. Five Below showing potential, moved through its 20-day last week. This was in focus. We looked for a move back above the 20-day. We got that. Consolidated last week with the indices. We're looking for a follow-through if the indices can muster some strength, as consumers' discretionary and retail stocks continue to outperform in the short term. HDB, a India-based bank with over 4,000 branches, looking for a push higher. Looks like we're going to bounce off the ATR1 instead of pulling back to the 20-period moving average. Just watch that this week. This one could move higher with a lot of the banks looking more bullish, like JP Morgan sitting right on the 20-period moving average, looking for RSI to rise with price. Innovative Properties breaking out. I know Stock Mama is in this one. Nice breakout from this base right along this 92 zone. Continues to press higher. Don't chase it here. Look for a little pullback. This looks like it's going to continue higher. Each time it breaks higher, it does pull back to the 20-day. All right, so most likely stick to that pattern. No need to chase up here. If you're in it already, consider taking a little profits on any strength and look for a little pullback in the short term. Lululemon, we took a small position in on Thursday towards the end of the day. It held up, moved back above our entry point on Friday. We're looking for this stock to continue higher along with Under Armour and other names in the group. Consumer discretionary and retail showing relative strength. We did see above average volume on earnings day. RSI is above 50 and continuing higher. We're looking for a follow-through day on Monday and Tuesday. Mgm Growth Properties, MGP, pushed through the 20-period moving average on Thursday, followed through Friday. Looking for 3 white soldiers here. RSI has room to run, most likely headed back to 33 in the short term. So I'd be interested, especially if it pulls back just a bit on Monday and then starts to move higher. New Oriental Education, EDU, above its 20-day, consolidated along that line last week, looking for a breakout and a follow-through on this tutoring and education stock in China. With thousands of education centers throughout the country, the stock looks primed to move to the upside. Paycom, another software stock holding the 20-period moving average, looking for higher prices. As the stock continues to trend, RSI above 50, need prices to move higher on Monday, Tuesday, RSI to turn back up, and for the trend to continue. PayPal looking for higher prices, push back towards the 20-period moving average at ATR1, started to find buyers on Tuesday and Wednesday, and followed through the rest of the week as RSI remains above 50. Planet Fitness pulled back to the 20-day on Tuesday and then followed through the rest of the week, looking for a follow through this week and a breakout in the short term. PGR trending, RSI above 50, respect the trend. When it pulls back, look for buyers. If it does, look for a follow through and jump on the train. Royal Caribbean Cruise Lines, this one looks like it's about ready to go. Each time it moves above the 20-day, having been down to ATR2 on the downside, it tends to rally through. Look for a push back up to 130 as this is the seasonally strongest months of the year for the company. ServiceNow looking for a push off this area. Trade Desk holding near recent highs. It does have a tendency to pull back to the 20-day, so we'd look for that first. Potentially, if it does start to follow through and show indications of breaking higher, it'll just be an indication. It'll just be confirmation institutions are continuing to buy shares, though I would prefer a pullback first for any new entries. TKR pulled back to the 20-period. Look for a follow-through day on Monday. This could continue higher. I know Mikey's trading this one. Look for a move back to 52 if we get a bullish follow-through day on Monday. Note where the buyers stepped up right at the 20-day. Twitter not getting much of a move on here. If this continues to show relative weakness, we'll most likely take this one off. Small position left in Twitter. Ulta Beauty along with Five Below, TJ Maxx, and a lot of other names in this group, Lulu, Under Armour, all of them with bullish action, looking for a follow-through and a breakout on Ulta in the short term. In addition, we're looking at Universal Display Corp. A number of you were looking at this last week. Flagged out, consolidating this recent gain. If it doesn't start to pull back further, look for a breakout. I'm thinking it's going to pull back to the 20-day first. We'll just have to watch price and confirm on Monday and Tuesday. Wyndham Hotels and Resorts. Remember, travel and leisure stocks showed relative strength on the heat map. Looking for this to follow through and break out. Push towards 60. You got a nice measured move of about 4 to 6 points. Looking for 62 to 64 in the short term. And finally, Xilinx got hit with a lot of other chip stocks with regard to Broadcom's comments, AVGO. If this doesn't bounce off of the ATR bands here and start to head back to the upside, we'll probably take that position off. We started a small position over here last week, only to see it reverse to end the week about 3% below where we bought it. Some of the stocks that showed up on the relative strength scans for Marcus Smith Growth 250, Digital Turbine. It's an inexpensive name, I realize that. However, it does show some potential. Earnings and sales continue to climb. Mobile software developer, content distribution and transactions. Volume has been pretty interesting. Looking at the increase in earnings the past few quarters is what got my attention. 200%, 500%, 400% with relative strength line climbing. We'll keep an eye on this one in the weeks ahead, trading at $4.72. ARQL last week on Friday had some positive news. Closed near where it broke out. If it does fade a little bit more, maybe we have an opportunity to get in this one. I'm thinking that the trial, if the results were so fantastic, institutions will most likely be looking to get into this one. So we'll look for evidence that institutions are picking up shares. Otherwise, we'll just keep an eye on it in the short term. Boot Barn Holdings, relative strength blue dot scan, breaking out of a base pattern, big cup and handle. 32.21 was the breakout zone. It's still in the blue area, 3% above the pivot in 1 day, so it's still within the buy zone. If it does pull back a little bit on Monday, that would be excellent. Looking for follow through in the weeks ahead. Coda Octopus Group, CODA, popped up on our radar on earnings Thursday with a big beat. This is what caught our attention. Looking for follow through, above average volume, annual sales and earnings continue to climb. Great Southern Bancorp, GSBC, looking for a follow through. It's in the buy zone, very large cup and handle breakout, which is a continuation pattern. Annual sales and earnings, stellar look to that. A's and B's and high 90s is what we're looking for in these metrics. That looks good. Above average volume with earnings in mid-July. Stocks in the opening monologue with the asterisk next to it, for one reason or another, look good for follow through. Mesa is another one of those names. An airline with potential flat base breakout painted on this one. Look at the volume. Look at the price action over the last 2 weeks and what it's done over the preceding few months. Looks like something is up. I'm just going to keep an eye on this one. Annual sales and earnings continue to climb. Regional airline servicing 110 cities in 39 states, District of Columbia, Canada, and Mexico. Watch for this one to continue higher in the weeks ahead. PaySign, another one of those payment processors, prepaid card service program stocks that continue to see relative strength. Volume continues to ramp higher. Has earnings in August. Looking for a little pullback to gain an entry into this one. Hasn't given us an opportunity after it broke out above $10 per share. Relative strength line climbing, annual sales and earnings increasing. A's and B's and high 90s, what we're looking for in these metrics. Looking for a follow through. Watch PaySign along with the payment processors this week. We could see some follow through and some relative strength. In addition, a lot of the builders looking very strong. BZH is mean reverting, looking like it's going to push back above the 20-day. RSI was oversold and improving, looking for a follow through there. Stocks like Toll Brothers also looking very strong. PHM, Pulte Homes, LGIH Homes, occasionally on the IBD 50, DR Horton, and Lennar. All of these look pretty strong going into the week, so keep an eye on builders. They could be set for a move in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on June the 16th, Father's Day. Look for the watch list tonight around 11:30 on the East Coast and 8:30 on the West Coast. I hope this helps. Take care, and we'll talk to you soon.